Right now, the overwhelming majority of investors are still very bullish on Nvidia in the broader semiconductor sector. The narrative is as strong as it's ever been. Artificial intelligence is the future, demand looks endless, and the company continues to beat expectations. However, I am short Nvidia right now. That does not mean you should short it with me. But I believe this is a prudent time for investors to consider taking profits or at least lightening their long positions rather than adding to them. Not because I doubt the long term power of AI, but because the price action and the market structure on the chart are showing clear signs of institutional distribution and exhaustion. This is one of the most expensive mistakes investors make. They buy on the story, hold their biggest winners far too long, and only sell once the narrative finally turns negative, usually after the price has already fallen sharply and they are in full capitulation. In this video, I'm going to walk you through the live NVIDIA chart in real time and introduce you to several foundational technical analysis concepts. We will cover Wyckoff market phases, Wyckoff distribution patterns, Weinstein Stage Analysis, and key momentum divergences using MACD and RSI. By the end, you will see exactly how price leads narrative more often than people realize, and how learning to read market structure can help you recognize when a major uptrend is maturing long before the mainstream story changes. First, let's talk about the pain points most retail investors face and why narrative investing leads to selling winners too late. The biggest difference between professional and profitable investors and most amateurs is timing. Amateurs buy on the story, hold winners far too long, and only sell during capitulation at the bottom. Professionals use market structure and price action to recognize when a move is maturing and when distribution is underway, long before the narrative turns negative. Amateurs never have a plan for when to sell, professionals do. Don't get emotionally attached to a stock or narrative. NVIDIA is a textbook example of this right now. Now let's jump into Wyckoff market phases on NVIDIA. The four repeatable phases of accumulation, markup, distribution, and markdown. Wyckoff market phases are a clear framework for understanding where price is in its cycle. NVIDIA has completed a long markup phase and is now showing classic signs of moving into the distribution phase. You can see the loss of upward momentum, the failure to make new highs with conviction, and the sideways turning that typically marks the transition. Now, let's take a look at some of the specific areas on the market phases and compare those to the live NVIDIA chart. Here, we have a $12 support and a $35 resistance that form our accumulation zone. Then we have a quick price move up and a retest where we see the jump the creek. We then enter into another markup phase near the $100 resistance, and then see our final markup phase pushing above the 160 level all the way to 200. At that point, we see our buying climax, followed by an upthrust above the buying climax highs. And we'll get into this a little bit later. Then we have a failed rally, and makes it very clear that this is our distribution zone. And we can set a bearish line in the sand at about $165 that represents the support of the distribution zone. Next, we're going to zoom in a little bit on the chart and compare this Wyckoff distribution schematic to the real life price action. And this is showing us classical institutional selling signatures. Within this distribution phase, Wyckoff identifies specific patterns institutions use to unload large positions into strength, unloading on unsuspecting retail at the top. On NVIDIA, we're seeing the preliminary supply, buying climax, and upthrust after distribution and the beginning of lower highs with contracting volume on rallies. This is not random price movement. It's the footprint of large players quietly exiting while retail enthusiasm remains high. So as we zoom in on this distribution zone, we can compare it really well to the distribution schematic. we have our buying climax, we have our upthrust, making a new high, we have our failed rally, and that forms our distribution zone. And here, our support line becomes our bearish line in the sand at $165. What's important about this Wyckoff distribution is it shows us exactly how price behaves at the top from a very zoomed in level. Now, another very similar and very important technical concept is called Weinstein Stage Analysis. And this is Stan Weinstein's four-stage framework for market movements. Weinstein Stage Analysis divides price action into four stages that institutions follow across all time frames. Nvidia is transitioning from stage 2 into stage 3 and showing early signs of stage 4 distribution. Higher time frame trend lines are being tested, rallies are failing to hold, and volume is drying up on the advances. Textbook stage 3 behavior. Now, as you can see in the schematic here, Weinstein analysis uses the 30-week moving average to track the price of the stock and help us determine these stages. When we add the 30-week simple moving average to our charts, we can see textbook Weinstein analysis on this stock. Even on the jump the creek, we have our retest of the 30-week moving average. And here in stage 3, we start to see price break below the 30-week moving average and the moving average start to flatten out. That's a really great sign that we're in stage 3, entering stage 4. Now, another really great confirmation tool here is key momentum indicators. And the two that I like the most are MACD and RSI and their divergences on this NVIDIA chart. So once the larger structure is clear, we can use simple momentum tools for additional confirmation. On NVIDIA, we're seeing the MACD cross below its signal line, a bearish MACD divergence, and clear RSI divergence, higher prices with lower momentum. And I'll show you exactly what I mean in a second. However, these are not primary signals on their own, but they align with the Wyckoff and Weinstein patterns and reinforce the distribution thesis. Now, what that means is we never use these as a primary signal, only a thumbs up when better indications are being shown in the market. Now, let's hop into what exactly I mean by RSI and MACD divergences. Here we can see two very clear price peaks of late 24 and late 25. Here we're making a higher high, yet on the MACD, we are making a similar or slightly lower high on the MACD. That is signaling weakness and is what we call a divergence in technical analysis. The same thing is happening when you look at the RSI. We have higher highs on the price, yet we have lower highs on the RSI. This is another cause for concern and shows us that overall, in the big picture, price is really starting to weaken. When we step out to the monthly chart, things look even more pronounced here for NVIDIA. We have a clear MACD crossover to the downside, and this is so incredibly extended, it's scary what could be in store for this stock in the future. We also have a very clear RSI divergence here as we make higher highs. Now let's talk about the limited role of narrative and catalysts in investment theses. Catalysts can accelerate, but do not create the move. Chart up, a good chart setup with a good catalyst can create an explosive move like it did here on NVIDIA. In our system, we say that narrative and catalysts do play a role, but they are secondary and usually arrive after price has already moved. Several real catalysts could accelerate the downside in NVIDIA and semiconductors this year, including an escalation in geopolitical tensions affecting chip supply. There's a lot going on in Iran and the Straits of Hormuz with some very critical semiconductor supplies. There's also evidence of growing AI fatigue in corporate spending. And finally, there's large-scale profit-taking by early institutional holders, as we just explained through a couple of schematics. Big investors are running for the exits with their profits, leaving retail holding the bag on this name. So what would I do if I still owned NVIDIA here? And how do we approach practical position management on a position like this? If I still owned a significant long portion of NVIDIA, I would be actively taking profits or at a minimum lightening exposure here. I would not be adding to the position or holding with the expectation that the narrative will save the price. The market structure has shifted, and protecting capital is more important than hoping for one small lag higher. Now, what does this look like in reality? In reality, here, as we look at the distribution schematic, we can't pinpoint exactly where we're at today, even though we have a good idea that we're in phase C or phase D. So, if I own this stock, what would I do here? First of all, any price movement below 165 would trigger a stop loss for me, and I would immediately exit the position. Now, you may be able to hold out for a final thrust to 180, 190, or even $200 on this name, but that's not something that I would risk if I were a holder here. And that brings me to our final concept for this video, the psychology of a market cycle. This is a really important cheat sheet that talks about how investors actually feel during this market cycle versus how does the price move. So you as the investor, how are you reacting to these price movements? Well, when you compare the price movements here on Nvidia, it lines up so well with the psychology of a market cycle. It's really incredible. We went through a disbelief phase, a hope phase, an optimism phase, a belief phase, thrill, and we're just exiting the euphoria phase. And in that phase, you think, I am a genius. We're all going to be rich. Now, the next step here is our complacency phase. We just need to cool off before the next rally. That might be how you're feeling right now. You definitely want to exit this position before you get into the stages of anxiety, denial, panic, and capitulation. Now, that doesn't mean Nvidia is going to go to $20. It's a very strong stock, but this will have a significant retrace over the next couple years. And it's just not worth sitting through as an investor. There's plenty of other bullish stocks in the market for you to look at. This is the exact confluence process I teach inside the Bison Blueprint Discord. Market structure, price action, and institutional footprints all aligning before any directional decision. Whether I'm long or short, the checklist is the same. Price must confirm the structure. If you are tired of relying on the latest headline or earnings narrative and want to learn how to read price action and market structure the way institutions do, the Bison Blueprint Discord was built for exactly that. Inside, you receive the full Confluence checklist, daily chart reviews, my actual buy alerts for entries and exits, and live office hours where we break down setups like this in real time. The community is for serious traders who value technical clarity over hype or want to learn how to approach stocks from a technical perspective. The link to join is in the description below. I look forward to seeing you inside.